Today, folks, we need to discuss why right now is the most opportune time to be paying attention to lithium and lithium stocks, as the price has seemingly consolidated, found its bottom, and it's likely that the lithium market will tighten in 2025, potentially shifting from a surplus to a deficit by 2029 due to the strong demand from electric vehicles and energy storage, while supply growth may not keep up with the pace of this rising demand. And I want to talk about a company that encapsulates this, including the critical metals market, and the stock is called ATLX Lithium, trading on the NASDAQ under ATLX for around $112 million market cap as of the making of this video, and is only up around 47% in the last 6 months after kind of going through a drawdown period into the summer this year. I want to break this down a lot more in depthly and why the market is missing this opportunity. And if you enjoy exploring underdeserved stocks in the market, considering that subscribe button. Now, ATLX Lithium did reach out to me as part of sponsored content. I'm leaving the disclaimers down in the description. These, of course, are opinions of my own and do not constitute financial advice, but hugealerts.com did a fabulous job at broad viewing the opportunity here, and we're going to break it down a little bit more in depthly, because ATLX Lithium isn't just another explorer. It's the largest holder of lithium exploration acreage in Brazil. It is ground zero for the next global lithium boom and holds a 28% equity stake in a critical minerals subsidiary. And I just want to read to you why pay attention right now. We're seeing Wall Street price targets soaring. We're going to see a couple of these when we break down the investor deck, but HC Wainwright said $19. We're talking about a stock that trades for $5.74 right now. Berkshire Hathaway invested in a company called Mitsu, which invested $30 million at a premium in this company, with massive projects near billion-dollar lithium giant Sigma, trading on the NASDAQ under SGML. Again, the market cap's around 100 million, so there's big potential for growth with an industry-leading 145% IRR and a rapid 11-month payback in a definitive feasibility study. There's been two non-dilutive prepayment agreements for its lithium concentrate totaling $40 million, with an additional funding interest from other parties. And they have this 28% stake in a critical minerals subsidiary. Critical minerals are obviously the hidden backbone of the global energy transition, and we're starting to see critical minerals blow up a lot with a lot of the geopolitical events that have been happening. And speaking to that, guys, I want to talk about the fact that they just don't own like the fastest advancing lithium projects in Brazil. That 28% ownership is in a company called ATLX Critical Minerals, which trades under the OTC markets JUPGF, and this one is trading up 208% year to date. And obviously, diving a bit deeper, because there's big demand for this right now, ATLX Critical Minerals owns 218,000 hectares of mineral rights for rare earths, titanium, graphite, uranium, copper, and nickel, which basically Brazil, where the subsidiary operates, hosts significant rare earth deposits and holds the world's second largest graphite reserves. This is incredibly intriguing, guys, and you can explore this much deeper, but I just want to give you the high level overview of this highly attractive lithium location, kind of what this company's doing. Again, we know it's located in Brazil's Lithium Valley, a premier lithium jurisdiction with high quality spodumene deposits, basically efficient permitting processes and favorable infrastructure. They basically have licensing fast track to speed up the project execution with ATLX, with permits in place, favorable infrastructure. It's a very hot area right now. And again, when it comes to lithium, I just don't think enough investors are paying attention to this. But let's break it down a little bit more in depthly. As mentioned, Wainwright, $19 price target. We're seeing Jake Sakalski here give it a $20 price target with institutional shareholders, the likes of Invesco, RBC. And if we scroll down a bit here, guys, what you have to understand is they're positioned to become a very low-cost producer with open pit mining, projected OPEX of only $489 per ton of lithium concentrate produced. So very great cost to bring this out of the ground and get it to market. Expedited timeline to production with permits in place, fully paid, $30 million in dense media separation plant already in Brazil, with definitive feasibility study published and project implementation starting. Again, huge catalyst, very near term, largest hard rock lithium exploration portfolio in Brazil, premier lithium jurisdiction with high quality spodumene and favorable infrastructure, strong metallurgical results, proven potential for high quality lithium concentrate, and incentive management team that own 26% of the company. And then they're committed to offtake prepayments with tier one lithium supply chain buyers sourcing basically the products, right? So if we dive a little bit deeper here, guys, just to get an idea of the DFS production metrics, we're talking about 539 million after-tax NPV, 11-month payback period, 145% after-tax IRR, and again, that $489 per ton cost. And you can kind of look a little bit deeper into this, but I just want to remind you guys that they have these strategic partnerships with these tier one global partners. We're talking about BYD suppliers, Tesla suppliers, global powerhouse, largest shareholder of Mitsu is Warren Buffett's Berkshire Hathaway, right? So really intriguing to see, like, obviously people are trying to build up the supply chain and they want to get access to these new markets. So they've got these major major strategic partners, which is great to see. And the project has already received all permits needed to assemble its processing plant and operate. So this is, again, another major milestone achieved. And you can take a look at management a little bit deeper here. But if you want to see what's been going on, the last news reports we've got at the end of September's Atlas Lithium subsidiary reports outstanding rare earth minerals across 2 project types, which is probably what's been helping driving Atlas critical minerals stock up the way we've seen it kind of coming through September into October. Those news releases driving a lot of volume. And then Atlas Lithium subsidiary iron quadrangle project on track for Q4 2025 revenue. So again, I want you to keep in mind, this company is on the forefront of major catalysts in what are going to be huge markets, in the future. They're huge markets now, but we have to kind of work out some of the supply constraints or the supply demand mix up that we've been seeing. And I think now that, we're starting to find that bottom and we're starting to go back into, a highly demanding market for these kind of, lithium and these critical metals, I think now is probably the most opportune time to watch companies like Atlas Lithium Corp. Now, obviously, again, these are opinions of my own, but I find it incredibly fascinating as I pass the question off to you. I'd love to know what you think about all of this down in that comment section below.